Hello, Uranium friends. We are back with episode 6 of Uranium Talk, talking all things uranium. I'm Jungle Funk from the Chart Guys, joined here by Chris. Chris, how are you?
Joe, I'm fine. How are you, buddy?
I'm doing well. You finally answered. You never answer to
Yes,
just throw it back to me. I'm glad you're fine.
I'm getting
Um,
with the program, kid.
right on. Well, speaking of the program, let's just get right into it. Today, we're going to talk about a couple fundamental things, one with URNM, one with the general space, and then we will talk about all the bear action that we saw across the markets and across the uranium space this week. And we'll move on from there. So, Chris, you want to fire us off with the upcoming split on URNM?
Yeah, Joe, even before I do that, I'm going to just touch real quick on a tweet from Clay Montgomery. Now, we recommended to follow him, but he sent this out yesterday, and it just refers to all the nuclear warheads and their uranium, and the country, the United States, has finished down blending all that. It's been like a 20, 30-year process. And from what this guy's tweet says, and we're going to link that, they're done with that. So it kind of fits in with the supply demand model, the bullish part. So, but on to URNM. So, do you have my chart up, by the way?
I do have your chart up, by the way.
Okay, great. Good job. Okay, so URNM announced that they're doing a 2-to-1 split this week. And that's going to be in effect on what, December 22nd, I believe?
December 21st, Wednesday.
21st. Okay, so 19th, if you are a shareholder of record on the 19th, you are going to get double the amount of shares, and the share price will go to half the price. So what does this mean? Well, in my opinion, it's a good thing. So I believe that it's going to bring more liquidity to this particular name, and anyone who's traded it knows that the float's a little tough. I also think that I think they're setting up for a better option chain, and that will be really good. So right now it's just got monthlies. It could have weeklies, and I think that's going to be really good again for the liquidity as well. And the other thing is that price point. I mean, people look at, sometimes they go, "Oh, I want to make an investment in uranium. I look at the ETF. It's $60. I don't want to do that." And now they might look at it and go, "Oh, it's $30. Maybe I'll take a little piece of it." So as far as the split's concerned, that's the deal.
Excellent. Yeah. So the biggest thing is that people already holding shares, you got to make sure you don't have a heart attack come Wednesday the 21st when it says your position is down 50%, because when you look at your quantity, that will be doubled, and effectively your the value of your position doesn't change. It's just the
Yeah, and
number
that's
of
happened to the
shares and
best of
price.
us at some point or other.
Yeah, it's just get the heart beating, get the blood flowing until you realize what
So
you got going
yeah,
on.
so let's talk about URNM because we've kind of been following and playing this range. Um, and I've said, I took some traders in at the bottom of this range, and I said 61 breaks down convincingly, and I'm going to be out of those traders. I still hold a core position. I'm still holding that trader share because we did get a rebound, but we are going to be looking if we need to get up and back into that 61 range. Otherwise, I'm going to be stopping out.
Yeah, essentially, bears when you break down below this key horizontal support, we had a bit of a uptrending support as well. Bears want to see follow through from that, and we only got a couple candles of it before a little relief bounce. We are rejecting from the base of that uptrending support line, but the question now will be from here: are bears able to confirm the daily downtrend and get to new lows? And that would be the sign that they're seeing follow through on the bear break from this. And bulls hoping for a lack of follow through are going to need to reconfirm an uptrend and get back into this range here. So we'll be watching. We got some key levels with the close at the low of day today. That's going to make the high of today the key resistance, and then obviously the 60.11 support low of Wednesday is going to be key support. So we'll be keeping eyes to see what kind of follow through we get from that.
Yeah, and it's gonna pay, by the way, to keep eyes on Kazatomprom, right? So Kazatomprom is actually relatively strong at the moment, and it's still in this sideways range, but we're gonna get an answer soon. But maybe an early signal could be because Kazatomprom is one of the largest holdings in URNM. So it's good to keep an eye. This is the weekly chart. It's good to keep an eye on Kazatomprom. This is the daily, and to see see how this plays out. Because if this starts to show some weakness, I'll probably end up getting stopped out of URNM.
Yeah, definitely could be some added downside pressure if we're to see Kazanaprom remain range bound from here. So something to keep an eye on there. What else you got, Chris? What else are you watching? The
I've been
uranium.
kind of just digging around because we've talked about fundamental. I've talked about fundamental stops. I mean, at some point, where do you decide that the thesis is dead, other than some sort of black swan, which we've discussed in other episodes? But I look at this quarterly chart of oil, and this gold line is the uranium futures, and there is a bit of a correlation here. So maybe people that are positioned heavily might want to keep their eye on oil and see what it does, because fundamentally, if fossil fuels get cheap, maybe they don't need to really press the gas pedal on nuclear power.
That's an interesting point you bring up, and honestly a bit foreign for me because I'm primarily a technical trader. Like I'll be aware of the fundamental narrative, and that will kind of tell me where to be focusing within the markets. But it's always the technicals that end up guiding my risk and whatnot from there. So yeah, I'd be interested to hear if anybody listening manages their risk based on fundamental elements, and if so, how you do it.
Yeah,
Um,
so give us a shout out and say, tell us, what do you think? What is your fundamental stop? What's your signal saying, yeah, this is no good?
yeah, would love to hear from people watching, and that this note here on the oil and uranium futures correlation is, it makes sense. We've been talking about XLE, and we'll get over. Actually, we'll just go right to this chart. We've been talking about the correlation between the uranium space and XLE and how it's something important to keep an eye on. And we can see over this past month and a half here, we've had a very tight correlation between CCJ and XLE. So that's what we've got up here, the CCJ's tightening range, and this was XLE in a similar tightening range. And you can, when you look at the troughs and the peaks of these moves, that's how you can tell if you've got a correlated name, if you're seeing those peaks and troughs at the same time. And, when you look at how XLE broke down out of its tightening range and you see CCJ breaking out of its tightening range, and that's just all the more important to be watching both of these sectors, or watching the energy sector when you're trading the uranium sector. And that kind of segues into my next note here about how I'm going to manage risk and continue to evaluate the health of the uranium space. And in a couple episodes ago, when we were talking about bear cases, one of them was if we see money rotate out of energy, it is going to likely be bearish for the uranium space. And we're seeing that bear pressure now as XLE gets some monthly consolidation underway. But we've had this uptrend intact for a good while here. And basically, for me, if XLE is continuing to form monthly higher lows, meaning the next trough is above the previous trough, if we keep doing that and keep holding the 12 EMA, then that's not a red flag for the uranium space. So we are looking for a monthly higher low compared to the 68.66. So that's something I'll be watching for. If we are to lose that, that'll be a big red flag for me. And then, as we've been talking about pretty much in every episode now, we've got this URA SPY ratio chart, and we've just got max clarity with a tightening range, lower highs, higher lows, lower highs. Now, the question is, are we going to get another higher low here compared to this low back in the mid to late summer? So we'll be watching this ratio chart. And if we do see this higher low form, then that would be uranium beginning to perform better than the S&P 500 again. So we'll be watching that and zooming into the daily here. Oops, that's not what I wanted to do. We'll be watching these EMAs. And if bulls can get up and over this 12 and 26 EMA, then that would be the first sign that we are shaping up a monthly higher low. So be watching that in the short term and bigger picture. If this were to break bear, that would be a huge red flag for the sector. And obviously, if we're going to see the full bull case play out, we'll see this range break bull. So going to continue to watch that.
So yeah, on that note, Joe, real quick. I mean, I'm holding a core of CCJ, but I'm shorting it almost every day now. Just day trades, right? I'm out of that position at the end of the day, but this is how I'm managing that core that's kind of taking a little bit of a beating right now, right? So it's perfectly viable to do something like that. Doesn't mean you're not a bull in the space. You're playing the action. The price action in front of you is telling you you're going to draw down here. So take advantage of it and kind of ease the hit of that core getting beat up.
Yeah, that's a very important and helpful tactic when if you're honed in on a space and you're managing core positions, you've got a slew of viable miners and with differing relative strengths and weaknesses and differing technical setups, and you just can take a clean one and then day trade that short. And like you said, you're back to cash on that trade by the end of the day. You're not swinging short on the sector, but we'll go over to CCJ here. And yeah, I mean, we've got big time volatility. The move
Look
off
at
of the
look at
top there is almost
look at the short
14%.
look at the shorting that's available for the past 5 days. I mean, it's
Yeah,
just
it's
solid. Even if you go to like a 15-minute chart, you'll just see it's just constant. It's actually low maintenance shorting at the moment. It's great.
yeah, it's when you get the technical move that supports it, you certainly you need to be skilled in and experienced in active trading if you're going to be looking to actively manage like that. If you're more of a swing, slower speed action hodler, you don't want to just hop in and short wildly against it. But if you've got that experience and you've got that skill set, then you can dip into your tool bag and pull that out and offset some swing positions. So from here, yeah, we're coming down to key support. We'll go back to the monthly on CCJ, and we've got several lows down in this area. Most recent one is down at 2102, and then we've got another one a buck lower at 2002. So if this 2002 breaks, that would be a red flag for the sector. There's no other way to call it as we just remain sideways up here. But as you come down into support, naturally you want to feel bearish because the action is bearish. But the name of the game is buying near support and selling near resistance. So we'll have to see some daily lower highs break. We've got a fresh one here at 2231. And if bulls can get up and over that, then they'll get a weekly bounce underway and get control there. But then we've got a lot of weekly overhead resistance. So we'll have to wait and see. But I mean, when you zoom out like this, we're pretty much just sideways. So can bulls hold this support or can they not? What else we got? Some other charts are looking a bit better. They're not as close to that support. And one of them is UEC here. I mean, support is still close. But when you look at CCJ, you've got a lot more overhead action, and you're a lot further away from these recent highs. But UEC getting nice and tight. So key support down here is at 318. Bulls are going to be playing off of it, and if it breaks, you just stop out. So at this point, we're quite close. Put a percentage on it, 5.36%, which we know in this sector is not a lot, but similar to CCJ, we got these daily lower highs we'll be watching, and bears will need to get up and over them if they're going to shift, or bulls are going to need to get up and over them if they're going to get their backs off of this wall down here. What else we got to look at? NXE, we were talking last week as it came up into this key resistance that there's potential that it could begin to see some relative weakness. And we were gauging that possibility based off of this NXE URA ratio chart, which, similar to the URA SPY ratio chart, is in a monthly equilibrium. So it's looking like that monthly lower high could be shaping up here. And we were using this 2-day 12 EMA as the guide. And now that we've broken down below that, that is that relative weakness coming into play here. So we'll have to look and see what the retracement looks like. Is NXE going to continue to be a relative bear after being a relative bull from October onward? Or are bulls going to be able to regain some control here? So going
So
to be,
bottom line is most of the space, the names in the space, they're sideways.
they're still just sideways.
It's still just sideways. We've had some very short term range breaks that just kind of give us a little bit of a heads up that there could be a little bit of a change, right? So URNM kind of broke its range. CCJ, close ranges that, within the past couple of weeks, we've had a little, a small shift, but it's nothing to be completely freaked out about at the moment.
Yeah, at the moment, as long as we're holding those monthly supports, things are still okay from a technical perspective, and bulls are ultimately looking to buy. But on that note, we've got a huge week coming up in the broad market. We're going to have CPI on Tuesday, followed by FOMC on Wednesday. So there's going to be a lot of volatility afoot, abound, and inbound. Any of those will work. And let me get the chart back up on the screen here. So this is the S&P 500 futures, and we'll go back out to the monthly. And we know that we are watching out for the potential of a monthly lower high to shape up here. And I would bet that CPI and FOMC are going to have a huge impact on what we get. So we'll go in one step further to the weekly. And basically, we've got weekly consolidation underway, and it's healthy at this point. And if the S&P 500 can continue onward, then uranium's going to have a lot better chance to hold these supports. But if
you got a nice bull flag right there.
Yeah, it's absolutely a bull flag at this point. We'll go into the daily to dissect that a bit more. And basically, we broke daily support. We haven't got much follow through at this point, as this support over here basically a bit above 3,900 psychological. We had 39,1250 was the low there, and we got 39,14. So that's just another note to the you buy near support and you sell near resistance. Like, it feels scary to buy that support, but what's your risk? Less than 2 ticks, or less than 2 points rather. So basically, with CPI coming up, and this is actually, we had a contract rollover with some contango, so I'm going to go over to the current contract to look and see. This daily bounce isn't quite as convincing as it looks on the continuous contract. But with these numbers coming up, we're either going to get a bull response and increase the odds of a weekly bull flag, or we're going to get a bear response and pull back and have that monthly lower high shaping up. And if that happens, it's going to be tougher for uranium to hold these supports. So with that, I'm not positioning in anything before these numbers. I don't position ahead of key economic events like that, because you can just see the charts get totally whiplashed around. So going to be keeping an eye on that and save any positioning for after. And another thing, last little thing here in terms of stuff bigger picture to watch out for. We know the dollar has been consolidating for a couple months now, month and a half, and we are looking for a higher low here. So if the dollar breaks up and over this daily 12 EMA resistance, that will be another headwind for the space, for the commodity space as a whole, for the markets as a whole. So that's something to be keeping an eye on there as well. And yeah, I think that's mainly what I am watching in the space, looking to see if UEC can hold these lows, looking to see if CCJ can hold its monthly lows, looking to see if NXE continues to see relative weakness, and watching out for that crazy 2-day back to back. I have not seen it like that before. So
Yeah, it's going to be a disaster. It's going to
yeah,
be very volatile, my friend.
yeah, it's gonna
I
be.
doubt I'll be trading it.
Yeah, it's you definitely, if you're trading those reactions, um, definitely have to have good execution, good risk management, and lots of experience. Because as a member at the Chart Guys described at the last whatever event it was, maybe it was the last CPI, maybe it was a PPI. You got so many. The market's so sensitive to all of these releases, and they described it as having bullets flying over their head. And they're like, "How do you
Yeah.
trade during this when you got bullets flying over your head?" And the answer really is experience. You just need to have been through so many of these crazy reactions and have full confidence that when you enter, you can put your stop in time, or you have brackets set up ahead of time. But yeah, it's going to be an exciting week. I look forward to it.
Yes,
That's all
sir.
I've got right now. Chris, you got anything else?
No, that's it, buddy. I would just say, let's hope that URNM does not break the recent low, because then I'm going to be out of my trading shares. And the truth is, I'd rather not be out of them because I would like to catch the split, but I'm not gonna base my stop off of a split.
Yeah, absolutely not. Absolutely not. Especially since the value of your position doesn't really change at all through that.
Yeah.
But um,
So over and out.
over and out. We will see you guys next week. Stay safe out there with all of these events coming up.
Let us know if you have in your head what your fundamental stop is. And if you can't tell us, maybe you should think about that,
Yeah,
especially if you're not using TA.
absolutely. Everybody ought to have their a point where their thesis is invalidated, whether it be fundamental, whether it be technical, whether it be a dollar amount, whether it be the volume of tears that you cry. Something you got to
Yeah.
know where
It's got to
where
be
your
something.
stop is.
There's got to be a point where you say, I'm done.
All right. On that note,
I'm done.
I'm done. Have a good week, everybody. We'll see you next time.
See ya.